Hello, ladies and gentlemen. My name is Yaron Mazor. I'm the chief trader at Fin Mentors, and today we are going to cover few issues or few segments. We are going to trade New Zealand dollar versus the Swiss franc. We are going to trade. We are going to change our um, pending orders in the euro versus the New Zealand dollar and the New Zealand dollar versus US dollar pairs. We just sent an pending orders yesterday after before the rate announcement by the Fed, which was positive. We saw an interest rate hike, but the US dollar weakened, although we saw a rate hike. It was the opposite reaction that traders were expecting, but this is the current status, and this is why we are going to change our trade entries, and we are going to add one more position into our live and real account. So let's start. I will share my screen. I will share my real and live trading account with you guys. All right, here's my screen, here's the account. Again, this is a real account. You can see here the credentials, the login and the investor password. This is a real and live account that we just start trade it yesterday on December 13th. And these are the first two orders that we have in the account, New Zealand dollar and euro and the US dollar, of course. And today we are going to add the Swiss franc. Um, as I mentioned previously, and the US dollar weakened yesterday, and we can see a clear and strong move against the New Zealand dollar, and of course against its major counterparts. But looking at the big picture, let me just present the big picture, and then we will zoom into today's major measures, and then we will get the conclusions. First of all, I will start with the one that I would like to change or delete the order in New Zealand versus the US dollar. So this is the current picture. We saw yesterday a strong breakout. We are in the daily chart. Each interval present 1 day of trading activity. And you can see that we are moving strongly against the trend, downward trend. Of course, we are hitting very important resistance level. Yesterday, I just sent an order around 69 sell order, of course, around 069 300 sell position, and the stop loss was around 070, but we already crossed it. So what I'm going to do now is to move my stop loss a little bit higher. I can do it like that in the chart, or I can change it also in depending order window. So I can do it like that. I can play with it a little bit. I will just set my stop loss slightly above yesterday highs, around 70,300, just for now. And of course, once the trade will enter into the game, I'm going to modify the stop loss and the TP points with respect to the market conditions. So this is one thing that we are changing today. The other thing that I want to change is the euro versus the New Zealand dollar pair. Again, yesterday New Zealand strengthened, but the euro strengthened as well a little bit. And here we can see the big picture. Again, this is a daily chart. We are looking at the mid-term trend, which is upward, and I'm expecting this trend to continue, as I mentioned yesterday in the webinar. So first of all, we saw strong breakdown slightly below the lower symmetrical line, lower support level of the uptrend. And again, if you don't know what is an uptrend or downtrend, you are very welcome to watch our webinars, educational webinars. It depends on your whether you are newbie to the market or a veteran. It doesn't matter. You can still watch our lessons. So now I just want to present my idea. Yesterday I said that even if we will break down, it's going to be a temporary glitch below the support level, and we will move back to the trend. So now I want to show you how it works and what I'm going to do. Try to draw with a different. So this is the trend. We are moving higher. And what I'm expecting that from this point, we are going to move straight to the year highs around 174. We can see that every time we hit a strong support level, we are moving higher. And that's what I'm expecting right over here. Yesterday, I just set the stop around 167, mentioning that once we will see the rebound, I will modify the stop exactly below the last support level, and yesterday it was around 168 or 167,900, and that's what I'm going to do now. I'm going to modify my stop loss here at 167,900. Now, because I have a great and positive reward to risk ratio, I'm going to add one more position here. And the second position will be 1.5 to 1 reward to risk ratio, which allows me to take advantage of momentum play. I'll show you exactly what I'm going to do now. Trade, new order here. It's the same entrance like yesterday, 169,500. This is the entry level. Of course, my trades are usually market pending order rather than market immediate market commitment. It's long-term trade ideas and not day trading. And that's why usually I'm looking at strategic points to enter the market. So it's buy stop. Only when the market price will hit 169,500, I will take a commitment here. Again, my stop loss is yesterday lows around 168 or 167,900, reflecting 160 pips stop. But the upside is much better. And here, 1.5 reward to risk ratio presents 172 or and 40 pips actually in order to stay with positive statistics, and 240 pips from 169,500 is 171,900, exactly 240 pips, and I'm placing the order here. All right, now you can see that the second order can hit within the next 3 or 4 days, while the last target will take a little bit more, and it can also retrace before it hit the second target. So, and again, the second target can usually I'm extending my profit targets, and I'm locking the position in the money when the market is moving into our direction, and that is how I'm increasing the probability of success and, of course, the statistics. Now, another trade that I'm going to focus today is, of course, the Swiss franc versus the the New Zealand dollar. We had the interest rate decision today, and in the interest rate decision, the interest rate remain intact. But once we will have a positive announcement by the SNB or the Swiss National Bank, we may see a positive momentum for the Swiss franc. And we had the producer price index, which is economic event, came in better than expected, better than analysts forecast from Switzerland. So I'm looking for additional entry point, and I'm focusing. My focus is especially on the New Zealand dollar, because it got stronger over the past 2 weeks without any reason or any significant reason, and that's why I'm expecting a correction or moving back to its bearish trend in the upcoming days. And I insist to take the opportunity here. I'm adding the New Zealand Swiss franc pair here to my watch list. And this is the chart window that I'm opening. If you want to see the thorough and comprehensive research that we did before we took the trade, you are invited to watch our webinars, Predicting the Market, where we are following a full process of trade decision making. We have automated trading system that provide us with the current market measures, and all we need to do is just see the information and take the decision respectively. Okay, here, this is the same picture, like the euro, like the euro New Zealand dollar, like the New Zealand dollar versus the US dollar. All these pairs, currency pairs, are hitting significant resistance level. Of course, it can break out further, and then I may lose the trade if once, of course, our pending order will be a position, will turn into position. But usually I like to look for smart entry points, and here we have technical smart entry point, which is and technical for me is all about timing, only timing, and not the full decision. My decision based on diversion in the sentiment, in the market sentiment, and in the fundamental status, the economic status that is the underlying force behind each and every asset. So we are exactly at the top of the downtrend here. Here, the New Zealand dollar is the base currency, and the Swiss franc is the quote currency. So if I'm trading against the New Zealand dollar, I would like to sell rather than buy here. Okay, so this is the movement that I'm expecting, moving back to the downtrend of the New Zealand dollar versus the Swiss franc. My entry point will be below yesterday lows, somewhere around here, to be on the safe side, around 68,730. My stop loss will be above yesterday highs, around here, 69,319, more or less. And my profit target will be here, around 67,400. So I will place the order now, and let's see how it looks like. And of course, I would like to see a positive reward to risk ratio at least 2 to 1. For each dollar I may lose, I can make $2 in profit. New order, again, pending order, sell stop. Sell stop means that I'm willing to take the position only when the market will hit 0.68,700, not before, not now, because I didn't get the validation and the confirmation yet that it is the right idea. For now, the market is moving higher and higher, and once it will turn over, I'm expecting downward movement back to the trend again. My stop loss, just like I draw here in, I placed, of course, um the resistance level. It's 69,300 or 400 for now, slightly above yesterday highs. Again, I may modify the position, I may modify the entries with respect to the market conditions and so on. And every time I'm changing anything from my initial entries, I'm going on air and I'm updating live in real time. So take profit is 67,400. And of course, the volume is the amount that I'm willing to take here, and the risk that I'm going to take is derived from my position size. We are not using any leverage in each position I take or we take in the market in order to be on the safe side. And of course, we are very moderate and we don't want to take high risk. We are targeting between 2.5 to 5% a month. This is what we're the returns that we are looking for in each and every account we are trading, of course, with respect to our trading strategies. So 0.1% reflects $10,000 position, 1-to-1 leverage, of course. No leverage is used here. And um, the stop loss here is around 70 pips. So I'm risking somewhere around $70. And my profit potential here is about 130 pips, reflecting $130. Okay, looks good. I'm placing the order. And as you can see, it's almost exactly where I just draw my support and resistance level. Let me remove it, and you can clearly see now the order entries and the positive reward to risk ratio here. Let me repeat again, and I will go from the end to the start in order to summarize this segment. Today I placed a new order in New Zealand dollar versus the Swiss franc, sell position, and the sell position is idea is back to its downward trend, and we are going to look for an entry below yesterday lows, and this is the direction that I'm expecting the market to move. Okay, we have a clear positive reward to risk ratio. This is the stop range, and this is here the profit range. And so you can see that we clearly have a positive reward to risk ratio around 2-to-1. Of course, I may change the orders with of course with respect to the market conditions. This is one trade we did. And of course, we modified our New Zealand dollar and New Zealand dollar US dollar pair, major pair. Trade entries, we changed the stop here. It is higher, it is above yesterday highs. After the rate announcement effect, EU FOMC rate announcement effect, of course, and this is the expected resistance level for now. And euro versus the New Zealand dollar here, I just moved the stop below yesterday lows, and I added one more position, which allows me to make Immediate profits, for us, immediate profits takes a few days to 1 week, and the second position will take a little bit longer with profit extensions. Of course, it is not in the market yet. All the orders are pending orders for now, and once the orders will turn to position, we will manage them, and this is very important. Trade management is a key factor um, for positive statistics and success. And once it will go live and active, and the trade idea will turn into market order, of course, we will update in real time, and we will go on air to present our trade management and further notices. Thank you very much for joining us today. I'm Yaron Mazor, Chief Trader at FinMentors. It's December 14th, and I wish you all the best. Bye-bye.